Yep.
Somebody's watching me. It's my anxiety. So while we're on the theme of anxiety, I thought a great topic for today would be one that can be a little bit anxiety inducing, and that is property taxes. So March is a month where your property tax assessment will get mailed out. Hopefully yours doesn't hit you in the face. But I wanted to take this opportunity to go over just very basic things regarding property taxes that I think are important for you to know as a homeowner or a potential buyer. My name is Julane Pratt and I am a realtor with EXP, and we're gonna get right into it. So a few things that are really important to go over is, what are property taxes? So property taxes are a fee that homeowners pay annually, and these fees help to fund essential community services. So think public schools, emergency services like police, firefighters, paramedics. It also helps fund waste management, so getting your garbage and recycling collected at regular intervals, and things like road maintenance. And in New Brunswick, your property taxes are based on your property's assessed values. And with regards to properties, that's not just your main home. Think anything that would be considered a real estate transaction. So property taxes are applicable on things like a vacant lot, again, your home and lot, even properties that are on leased land, such as a mini home that's in a park. Property taxes can be applied on all these, so yep. Each year, Service New Brunswick assesses the value of your home, and they use factors like location, size, and market trends. And again, we're keeping today's video really basic, so other than that, I'm not gonna go too much into how assessments happen or even the rates, because they do vary across the province. Even things like if you have a second property, how you'll be taxed on that could be very different. So important to check in with your realtor or hop on the website for your local jurisdiction and just double check so that you're properly informed and prepared for potentially up to a double for a second or non-primary property. So the first thing we're gonna go over is that many of you will not really need to deal with your property taxes aside from kind of double checking your assessed amount and making sure you're okay with it. Again, if you're not, there are options to appeal it. But what a lot of lenders offer now is something called a PIT mortgage. So that is an acronym, PIT, which stands for principal. So that is your outstanding loaned amount. So if you purchased a property for $100,000 and put $20,000 down, your outstanding principal would be that $80,000 that you are making payments on and slowly chipping away at. Interest will be the lender's fee for letting you use that $80,000 to purchase the property. And T would be your taxes. So what is really important to know about PIT mortgages is actually with regards to buying. So often lenders do front load the property tax portion of your PIT mortgage. So they've paid off your annual property taxes really early on for you. But this can cause some confusion and may be something you need to budget for, is if the person you're buying from was on a PIT mortgage and they have now paid off their annual taxes really early on, you may have the repayment for the time you've taken over the property added to your closing fees. So you could get charged $3,000 more than you additionally budgeted for, so that you can reimburse the current owners that you're buying from for their remainder of the year that they've paid for taxes, where you are going to be the resident there. So very important to consider when budgeting is with regards to PIT mortgages. And if for whatever reason your lender does not have a PIT mortgage option, they do have a really great thing, equalized payment plans for property taxes. So they're going to take the annual amount owed and just divvy it up equally for the 12 months of the year and do a monthly charge. And you can set it up to just be a direct deposit out of your bank account, so not at risk of late fees or anything like that. And there's no penalty for doing this. Sometimes with things like insurance, instead of paying it up front and doing the equalized payment, they do throw a little charge at you. With property taxes, they don't. So instead of paying it all up front, you can maybe even invest that money and have it do something for you, and then just go right for the equalized payment options. New Brunswick, I feel especially, has had some very dramatic increases in property assessment values and therefore the fees that homeowners are required to pay as their property taxes. As you can imagine, that created a lot of anxiety, a lot of financial hardship. So New Brunswick did enact something just to try and help with this burden, and it's called spike protection. And spike protection limits annual property tax increases to a maximum of 10% on eligible properties. Even if the assessed value increases more than that, it would be phasing in the excess over time. With regards to eligible properties, this is only applicable on owner-occupied residential properties. And an exclusion you really need to be aware of is that if the property has sold the previous year, it is not eligible for the spike protection. So especially if you are purchasing and the purchase price far exceeds the current property assessment value, you could see a significant increase in that assessed value and subsequently the tax amount you owe. So do be aware of that. Other exclusions include new construction, which makes sense because usually the assessed value is just for the lot, and then they want to now account for hopefully your gorgeous new build. Another exclusion would be if your home has had major renovations, where again you just assume that there's going to be a significant difference in the value. It could exclude you from qualifying for spike protection. I know this is still a little bit confusing, so I'm going to use real numbers because I actually qualified for spike protection on my property taxes. So in 2023, my assessed value was $237,800. Then in 2024, my property assessment value went up to $280,200, which exceeded that spike protection 10% maximum. So although my assessed value stayed at $280,200, the amount that I was paying taxes on was $261,500. So they had to kind of waive out $18,700 that was beyond what was allowed as an increase based on spike protection. And on top of the spike protection, there are some rebates and credits available, so definitely check in if you may be eligible for them. So again, we've only hit the very basic topics, but I know it can be very overwhelming navigating through property taxes, so hopefully this helps you out. And if you have any questions, make sure to either send us a message, comment on the video. We'll have our contact information, so if you don't want it to be a public comment, you want to text, email, we'll have our information below, so just reach out and we'd be so happy to help you along in this journey. Get up, 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 fin up.